S&P 500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hello and welcome to another Trendspider Technical Analysis Series video. Today we're going to be talking about the 5 most common mistakes that most traders make and how to utilize Trendspider to avoid all of them. Let's jump into it. The first mistake that most traders make is not understanding the current trend of the market. Luckily, there are a number of tools that can be utilized to solve this problem. Let's start with something really basic like moving averages. Here on my chart, I have a moving average ribbon indicator. This indicator contains 5 moving averages and I can set their lengths to whatever I want. Personally, I like to use an even distribution of short and long lengths. As I flip through charts, I can very quickly see where the price is relative to each of these moving averages and where they are relative to one another. If the price is trading above all of them and they're in alignment, meaning they're in order from top to bottom, shortest to longest, then we're in a strong uptrend. If the opposite is true, that means we're in a strong downtrend. In choppy markets, we tend to see price fluctuating around the moving averages, crossing back and forth with no discernible trend. Take this a step deeper by turning on the multi-timeframe analysis button. This allows us to see our indicators on 2 timeframes on a single chart at once. If we see this same alignment across multiple timeframes, it's an even stronger trend. If that's too many indicators on the chart for you, try inputting your moving average conditions into our smart checklist and remove the indicator from your chart altogether. If the conditions are true, a green box will appear, and if all the boxes are green, you're in trend alignment. Now that we've learned one simple way to determine the current trend of the market, we can begin to plan out our trade, and this leads us to the next mistake that most traders make, which is simply not having a plan. If we know the current state of the market is trending up, we want to be considering long positions, which means we need to be looking for bullish entry conditions. Now, you might have particular setups that you like to trade, but if you don't and you need help picking out some potentially bullish entry conditions, you can utilize the market scanner, which contains presets for many different types of setups. Type bullish into the search bar, and all of the relevant condition sets will populate for you. You can select one you like or input the conditions of the strategy that you like to trade, hit the scan button, and every name that's meeting the criteria you're scanning for will populate on the right-hand side. Now, knowing all these names is a great first step, but we know that not every name performs the same under the same conditions, so we'll want to test and see how all of these names have performed historically when these conditions have been met in the past. We can open up our scanner as a watch list so that all the names are easily accessible, and then we'll open up the strategy tester and select the strategy we want to test. Note the entry conditions of my strategy here are the same as what we just scanned for. As we click through the names in our scanner watch list, the results of the strategy will populate for each name, and it's almost certain that at least 1 or 2 will have results that are better than the rest. Once we have our strategy selected and the names we want to trade it on, we're just about ready to take a position, but before we can do that, we need to address the next mistake that most traders make, which is failing to manage risk. Unfortunately, strong historical performance does not necessarily equate to strong future performance. With that in mind, risk must be managed, and this can be done in several ways. First, we can use the risk-reward drawing tool. With a click and a drag, I can place this tool at my planned entry and then measure out my price target and stop loss levels. A 3-to-1 risk-to-reward ratio is a common benchmark, so I'll measure those distances and create alerts on both the top and bottom lines. If my stop loss level alert sounds, I know my trade idea is wrong and it's time to exit. If the upper level alert goes off, I know it's time to take my profit. If you use a specific indicator to define your exit, you can right-click and set an alert directly on it, or deploy a multi-factor alert and have the platform monitor a set of conditions automatically for you. Knowing where your trade idea is wrong is key to avoiding big losses, and taking the time to define these levels ahead of placing a trade is an important step that's easy to miss in the heat of the moment. The next mistake that's common amongst traders is not understanding the current market environment. Let me explain. Many factors can come into play when considering the market environment. Time of day, news events, options expiry, economic data, all of these outside factors can play a role in the performance of a stock, and for that reason, they must always be taken into consideration. Tools like seasonality provide deep insights into the performance of a stock over a specific period. You can break down a stock's performance by hour of the day of the week of the year, or month of the year. It's relatively common knowledge that the open and close of a session are often more volatile and the afternoon is less so, but seasonality allows us to drill down and see the best performing hours, days, weeks, and months for any security. In addition, the data flow tool can be used to maintain a bird's eye view of things like unusual options activity, insider trading, analyst estimates, news, and more. For example, maybe you happen to notice strong call flow coming into a name and insiders also buying around the same time. These fundamental data points might provide the additional confirmation that you require to establish a position. Finally, the last, but arguably the most detrimental mistake that traders make is relying on other traders to tell them what to do and when to do it. Sure, there are some great follows out there, and there is certainly no shortage of traders posting their big wins. But at the end of the day, it's up to you to push the button. We all have different risk tolerances, skill levels, and account sizes. If you're going to make it as a trader, you'll need the understanding that comes from managing your trades on your own, from ideation all the way through to execution. Using the tools outlined in this video, you will be able to avoid all of the most common mistakes that traders make, and you'll be setting yourself up for success in the markets. I hope you found this video helpful, and I look forward to seeing you in another Trendspider Technical Analysis Series video soon. As always, happy trading, and catch you next time.